Welcome back. You're watching Trade of the Week, and today we bring you a technical analysis of Netcare, the JSE, and the rand against the dollar. Rob Pietropalo, co-head of trading at Unam Capital, joins us with that analysis. Thank you so much for your time and for joining us in studio, Rob. Let's actually start off with Netcare. I mean, this is quite an interesting sector. I don't know if I should say it's unloved or underappreciated, but really screaming undervalued most of the time. So just to take us through what you are seeing there in terms of Netcare. One of the only two healthcare stocks on the JSE right now.
Well, it's Life Healthcare and Netcare are those sort of hospital healthcare type stocks. But you're right, they've been very much unloved for a very long time.
Yeah.
Still suffering from a massive COVID hangover, all sorts of things. But this Netcare chart really interests me, and I started seeing some serious action pick up when the Government of National Unity was announced, or the agreement thereto. So read into that what you will, because if you remember, the government did sign in the NHI bill right before the elections. So maybe there's some positive sort of sentiment coming through that maybe it's not going to be as bad. But like I said, read into that what you will. The chart for me is very interesting this time around. You can see that from June, it's really been on a run from the beginning of the month. And a nice little cup and handle sort of pattern there. These tend to be quite bullish. And you throw into the mix on Wednesday, they're paying a dividend of 30 cents, which is about 2.5%, half of their 5% annual dividend. Okay. So it looks really attractive to me at these levels, and quite notable as well is that it's starting to approach these sort of oversold levels, or maybe a bit of profit taking after this nice election rally. So this looks very, very interesting to me at the moment. We actually have bought the stock. This chart is based on Friday's close. And it's a very, very easy trade, easy to know when you're wrong as well. So I'm calling a buy here at about 12.40 if you can get it better. I think it did touch 12.40 this morning. And I'm looking for a little bit of a move up to that resistance, that previous resistance of 14. And if the cup and handle pattern plays out, should definitely get to at least 13.90 rand.
What do you call that pattern? A cup?
We call it a cup and handle
pattern. Cup and handle, yes.
So almost if you imagine like a teacup. And when a share price does that, they tend to be quite bullish patterns. If they do continue with that sort of handle pattern, they normally have a nice strong run after that. And I think that'll happen after the dividend. So if this pans out, there's a risk to reward ratio of 3-to-1. Just remember that if you place a stop loss at 11.90 rand, you've got to deduct the dividend on Wednesday and make room for it, because the stocks do tend to pull back by at least the dividend, and if it doesn't, well, then it's a gift. So yeah, that's our call in the sort of healthcare sector. As you said, very much unloved, but I think now's the time to start looking for some bargains, especially after a big market rally that we've had.
Well, did you manage to get in actually when it was still unloved before the GNU? Or, I mean, would you say that even now it's still quite undervalued to the point where you can still nibble even though it has had that run after the GNU?
Absolutely not. Stocks normally tell you how healthy they are. I only bought it once we knew that there was a memorandum of understanding, which I think would sort of a rising tide floats all boats. There's a lot of optimism in the market. We've seen massive inflows, foreign inflows coming into the market. And I just got a feeling that these healthcare stocks looked very sick and dangerous prior to that announcement. And I think now that there's a collaborative sort of effort across government, that the healthcare sector might be in for a little bit of a bump.
And also just considering now that it's not just the ANC that actually did sign the NHI in there, there are actually other parties that maybe might kind of neutralize the situation in terms of the implementation.
And it's also how they plan to spend the budget around the NHI as well. And I think I like the makeup of what we've got going on, and I think across the sectors, education, healthcare, all the major ones, I think a little bit of stability is all investors needed.
Well, you talk about that dividend where you kind of need to make accommodation for it. Would you say that when we do get to those points where, you know, there is a dividend paid out and obviously the stock takes a dip, would that also provide an opportunity for one to get in?
I would say yes. I mean, Netcare runs on a 5% dividend yield, so this is half of that. So I would probably use dividend day as an opportunity to get in. I wouldn't be surprised if it held its dividend on Wednesday.
Okay.
Because you can see the price action on this chart. It's been extremely strong from the beginning of June, and I don't see that abating now, and I do expect this cup and handle pattern to play out.
All right. Well, let's get into your next one, which is the JSE, the actual company, not one that a lot of people talk about, but I mean the people that have spoken about it always seem to be quite bullish on JSE, the company, even though sometimes the bullishness doesn't, extend to the actual bourse, where we a lot of the time see quite low liquidity. What are you seeing there with the JSE? I know that the results that they keep on coming out with have actually looked quite good.
Well, another stock that's been unloved for quite a
Yes.
few years, and then there's also competition on the other exchange. But again, we've seen foreign inflows coming in after the elections, a lot of investment flows coming back into the South African market, and that can only relate into better revenue for the Johannesburg Stock Exchange. And remember, they're just like any other company. Investors want to see profit, they want to see revenue. And again, very much the same. In fact, this started ticking up from April. And then after the elections, you just see a straight line up and a proper breakout of not only the 200-day moving average, but also the 50-day moving average. And then one of my favorite signals is that golden cross, which we will chat about a little bit later. But that is a bullish sign. A golden cross is normally followed by much stronger, higher moves for a period of time. So this interests me. Also starting to come down a little bit and not quite oversold yet. But the fact that it's broken that previous resistance, $100 level, I think is now support. And if this golden cross is anything to go by, and all these foreign inflows start to come through in the next set of results, I have no doubt the next move is back up to that 120 where I think it should be. But this is an opportunity that's only arisen once again thanks to the results of the election.
I mean, just looking at, the bourse versus the company, because there's been a worry, particularly this year, of low liquidity. Of course, we have seen a bump up of that, amid the GNU. But just looking at how it filters through to the company, is that not a worry, considering, the kind of diverse revenue streams that they're going for?
Well, look, I think the JSE, I suppose, is comparative to your network, your cell phone network provider. Investors cannot invest without a stockbroker who plugs you into the exchange, and the stockbrokers are the ones that pay for those volumes that flow through into the market. So I think as things improve, foreign inflows coming in across multiple assets, not only JSE stocks, I think that there are green shoots for the JSE, and I think their results do or will represent what is happening right now, even if it's just for the next quarter.
Yeah, and it's also just quite encouraging also seeing the momentum that is picking up when it comes to
it's nice to see some liquidity come back into the market.
Yeah,
so
exactly.
Definitely.
And some listings, even though some come from unbundlings, but still good news anyway that we do have new companies going into the JSE and returning as well. Well, let's check in on what you're seeing there on the currency scene, Rob. If I remember correctly, the last time you were long on the dollar.
I was long on the dollar,
yes,
and we were right.
Oh yeah.
It definitely did spike. I think the market priced in too much too early before the elections.
Yes.
I think we spoke a couple of days before the elections.
Yeah.
The picture has somewhat changed in my view. You can see here that the rand has really been, or the rand dollar has really been stuck in that range, sort of between 1930 and 1810, where I still think it is this morning. I think it closed, on Friday about 1820.
Yeah.
We're probably still hanging around there. But I think now that investors love stability.
Yes.
They need that level of comfort, and I think they're starting to get that, and it's starting to show in the currency. The volatility has dropped quite a bit in the pair. So I think the rand breaks out of this range. If we just look at the oscillators at the bottom there that I've circled, you can see the momentum has shifted down. And this is, remember, a USD ZAR chart. So what we essentially want to do is want to buy the rand and sell the dollar. It is a currency pair. So I think quite safely, if you sell the dollar, or in other words, buy the rand at around 18.20, you might get better this afternoon. Let's see how the US market opens. I think the next move is going to be a nice one for us, hopefully in time for Christmas. And I wouldn't be surprised if we tested that 17 rand to the dollar level. I think the picture changes a little bit if we break through 18.50. So I would put a stop loss at 18 rand 60 to the dollar. And then I think maybe that'll just be profit taking or any other reason. But that's where I think the picture changes, because then it breaks back above that 50-day moving average. But I don't see any reason why the rand should weaken against the dollar in the next couple of weeks.
It's quite interesting to see. I mean, you were saying something different the last time, and now you're buying the rand. So it's quite interesting, seeing how investors can take opportunity, no matter which direction, the stocks or the currencies go in. In terms of, obviously now you're looking at, the rand kind of getting closer to that 17 rand against level against the US dollar. In terms of the interest rate picture, is that not kind of influencing your decisions right now? Where are you looking?
Well, look, let's be honest. I think the US moves first. Everybody else will follow. But no, we trade from a technical analysis point of view. We trade what the charts tell us.
Okay, yeah.
And the chart is telling me that the momentum has shifted towards the rand. The dollar's not looking great either on its own. But I think in terms of an opportunity, the logic was before the elections, the market priced in probably too much good news ahead of the event. Okay. Which turned out to be the case. And now that the news is in, I think the rand can now move forward on its own steam.
All right. Let's actually get into the educational segment. You spoke about we were looking at the JSE chart, you spoke about the golden cross, and you actually want to delve deeper into that, but also a death cross as well.
Yeah, they work the same in opposite directions, and this is quite a nice sort of signal for any beginner or novice traders to look for. The golden rule is that if a stock is trading below its 200-day moving average, it's probably not in a good place, and you probably shouldn't be buying it. But in terms of a golden cross, very simply, it's when the shorter term moving average, for example, the 50-day moving average, crosses above the longer term or the 200-day moving average. So the minute a shorter term moving average crosses above a longer term one, it's quite a bullish signal, followed by very nice moves upward. Okay. The death cross is completely the opposite of that, and normally follows a golden cross after some time, and that is exactly the opposite. So when the short term moving average crosses below the longer term moving average, it's probably time to take some money off the table. And it's just a nice visual signal to know what kind of stocks to look at, whether you should be taking a punt on those or not. And especially for medium to longer term investors, it's a really nice, comfortable way of knowing where to get in, where to get out, and what to expect.
Yeah, so maybe if you are not in a stock already, when it gets to that death cross, that would provide an opportunity.
Well, I would wait for that death cross to play out, because stocks don't move in a straight line. I mean, they could go down for an extended period of time, or that could reverse straight away depending on various fundamentals. But it's just a nice visual entry or exit point. So when you see a death cross, rather get out, wait for the next opportunity, and vice versa. When you see a golden cross, have a go. You get more of a level of comfort knowing that you're buying in the direction of the market.
Do they always follow each other?
Not necessarily, but they tend to over time. But we're not interested in when the death cross is going to follow a golden cross. We are trading the golden cross, especially in terms of the JSE trade. The golden cross has occurred, the stock has reacted, it's still bullish, So when that changes, we won't wait for a death cross, because then you're following a share all the way down again.
Yeah.
But that's why we have stop losses and take profit levels in place. But as I said, it's just a nice indicator, especially for novice traders. When they see that signal, they have a higher level of comfort that the trade is probably going to work out in their favor.
All right. Just lastly, Rob, we are getting to the end of the conversation, but just to pick your brain, you've been talking a lot about the GNU and obviously where you're finding opportunity. Are there any specific sectors that, you know, where you feel like you cannot pass this chance up in terms of how they've traded post the GNU?
Well, I think we've had quite a hard run.
Yeah.
But I'm going to reiterate, I think the healthcare sector, and you can include stocks like Discovery,
yes,
Aspen,
okay,
those kind of guys.
And that was hit quite bad, you know,
absolutely.
after the NHI announcement.
I don't know why, but I have a feeling that there's going to be some kind of softening on this HNI, because everybody kicked against it. Because where's the money going to come from?
Yeah.
I do think there's going to be inroads made there. If it's not completely taken off the table, it's going to be more of a happy medium, and I think we see these healthcare stocks kick up hard.
Yeah.
So that's where my money is at the moment.
All right. Well, thank you so much for your time and your insights today. We really, really appreciate that technical analysis, Rob. That was a co-head of trading at Unam Capital, Rob Pietropalo.